I'm Charlotte McLeod with investingnews.com, and here today with me is Adam Rozencwajg, managing partner at Goehring and Rozencwajg. Thank you so much for joining me today. Great to have you as always.
Yeah, nice to see you as well.
Really good to be speaking with you. I think it's a good time to be catching up. And today we're going to focus on the uranium sector. So much going on there. Where I wanted to begin is you recently had your quarterly report come out, and there's a section on uranium in there. I thought it was really interesting. I do encourage people to go take a read. You did a recap of the history of the market, and you broke it into, I think, 4 past stages and a 5th one that currently we're in. I don't want to ask you to recap almost 100 years of uranium history, but because past can be prologue, I did want to ask you to talk about one point that you made, which was that, in many ways, uranium's been in a persistent bear market since 1980 or so, except for one break that you talk about. So I thought that was a pretty wild statement, pretty interesting to look at. So I wonder what you could say there from that historical angle.
Oh, absolutely. And, I am going to go back the full 100 years because, what fun is it to only do half the story? So if you think about, uranium and nuclear power, in many ways, it's like the complete opposite of the oil and gas business, where you get great data coming out every Wednesday and everyone kind of hangs on each little data point and the market moves, it seems like, at a frenetic pace. The uranium market moves so slowly in some cases that you talk about years and even decades. And so you can really go back and right from the very, very beginning of splitting the atom and the Manhattan Project, you can almost divide things into, like you said, 4 periods. So the first thing that happened was, obviously from the very start of the Manhattan Project in the early 1940s, all the way through until about 1980, you produced way more uranium than you needed. And it makes sense, right? At the beginning, it was purely a weapons program. It was purely a government strategic resource. We didn't have any nuclear reactors until 1960. And so we were out there accumulating all the uranium in the world and putting them into these government stockpiles and making them into weapons. Nuclear reactors came on the scene beginning in the 1960s. And actually, believe it or not, it ignited a massive uranium mining boom through the 1960s, which was a time of all these investment manias, the Nifty 50 and the mutual fund gunslinging craze, the conglomerate craze. But, you could go back and there was an old adage that, every young Wall Street guy would have a copy of the Northern Miner tucked under his arm. And I think they would even send, analysts up and drive them up to Montreal to bring them back down the next day for, people really in the know to have. And it created this huge, huge uranium mining boom, but there wasn't enough reactor demand. And so you built up not only government stockpiles, but then you built up all these commercial stockpiles. And until 1980, you just kept doing that and kept doing that and kept doing that. Finally, in 1980, the government said, look, this is enough. We have more weapons than we know what to do with. We have all this uranium in our government stockpiles. Let's start to reclassify that as commercial inventory, and let's start to work on how we can decommission some of our weapons and turn them into nuclear fuel for nuclear reactors. And that created this wash of secondary supply beginning in 1980. Mine production collapsed as a result of that because you simply didn't need all the mines operating to meet the reactor demand. And from 1980 all the way to the middle 2000s, you had a primary deficit. If you look at reactor demand and you look at total mine supply, reactor demand was greater than mine supply. Well, how could that be for 30 years? It's because it was just whittling down these stockpiles, whittling them farther and farther and farther and farther down, until finally in the middle of 2000s, you hit the tipping point where I think you got down to like 200 million pounds of inventory left in the commercial markets. You're on a days of cover basis, you were getting tighter and tighter and tighter. And then uranium prices just took off. And that's when they went from about $9 up to $150 in a few short years. And the last major speculative boom of uranium juniors in Australia and in Canada, mind you, most of which, if not all of which, never made it into production. That was because we had kind of worked off those stockpiles for the first time, you could argue for the first time ever. And no sooner than that happened that the GFC and the price of everything got sold off. It turned out in retrospect, when Lehman Brothers went bankrupt in 2008, that they were sitting on like 15 million pounds of U3O8 sitting up in Cameco's warehouses in Saskatchewan. That's the kind of speculative side that this was taking on at that point. The hedge funds came in and started to play it. I'm sure Lehman Brothers was not the only one. They were just the only one that had to show their balance sheet at the end of 2008. Uranium came back, and then Fukushima happened, and we shut down 30% of our reactor demand, in the world, obviously not just in Japan, but all through Western Europe. And all of a sudden, and at the same time, I should point out also, Kazakhstan, responding to the last boom from 10 years prior, brought on all this new production. And so at just the wrong moment, you started to build these commercial inventories again. And by 2017, you got to the point where total commercial inventories were nearly as high as they were at the peak back in 1980. And prices had fallen back down to $19 a pound. At that point, Cameco could actually go out and buy spot material cheaper than they could mine it. They would sell that into their higher priced future order book. And so they shut in their production at McArthur River, and Kazatomprom shut in some of their production as well. The market balanced, and again, you had this primary deficit. Reactor demand was ahead of mine supply, and again, commercial inventories went down and down. And what's so interesting is that right now, you're back to where you were in the middle 2000s. You're back to that kind of 250 million pounds. On a days of cover basis, it's even lower because we have more demand now than we did back then. And you're at the moment of inflection where in the past, uranium has just surged higher. And I think you're starting to see it, right? So obviously, as we speak today, it's the 29th of September. Uranium has crossed $70 for the first time since Fukushima. And what we're hearing is that part of that is speculative demand, but part of that is also the fact that the fuel buyers, who really forever could trade this market very aggressively because there was always a secondary supply somewhere, either from the underfeeding and the enrichment, or from the Russians, or from the Fukushima stockpiles. It was, you don't want to say it was easy, but it was kind of easy to be a uranium trader. You could be very, very bold because you knew that there was just these pockets of liquidity and material available for you. That, I think, is now quickly beginning to change, and a lot of these guys are beginning to realize that they're undercovered for the next several years. And so I think you're starting to see this melt up in terms of price.
Okay, that was really good. We went much further back in history than we usually get to hear in terms of this market, so I appreciate that. And so we're in this fifth stage now, as you've described it. And I was going to ask, where are we at in the current cycle? And I think you've kind of answered that, but is there anything else you would add in terms of where we're positioned at the moment?
I think we're just starting, and I think this is going to get completely out of hand. And I think one of the reasons it's going to get completely out of hand is really two things. So first of all, from a demand perspective, it's really hard to say what price is too high. It's hard to say where will you see demand destruction, because the total cost of a uranium fuel rod in a nuclear reactor is de minimis, particularly if you've already sunk all the money to build the thing, right? So you will do everything in your power to keep that reactor spinning. And so could you take uranium to $300? Yeah, absolutely. You could take it to $500. There's no demand destruction in this equation, at least in the near term. Maybe at some point you might consider not building the next stage of reactor, although I think we're far away from that. But on something that's already spinning, there's no chance that you don't buy uranium. So you have a captive buyer. It's not clear where the material comes from. And the thing that's now making everything much more complicated is the introduction of the Sprott Physical Uranium Trust, which used to be the Uranium Participation Corp up in Canada, still in Canada. And in full disclosure, we own a good core position of the Sprott Physical Uranium Trust in all of our accounts. And that now has a mechanism by which, if that fund trades at a premium to its net asset value, they can issue shares in the market, take that cash and go and buy uranium. And if it trades at a discount, they don't have to sell uranium. So that material comes off the market. It's effectively trapped in this vehicle. And right now, between it and Yellowcake, we estimate there's about 80 million pounds tied up in this financial trade. So it's pretty sizable. And it's not going to take the speculators very long to realize that they can really kind of bull up this vehicle, get it to trade at a premium, which will then allow them to issue shares, go out, buy uranium, push the spot price up, which will then help the bid price on the underlying net asset value. So it becomes this kind of like self-fulfilling prophecy in a way. And as of now, people that are really into the uranium market talk about it. Now you're hearing a little bit, but it's not going to take long before, the hedge funds and the major, quant funds and whatever realize that this trade can be really pushed into excess. Ultimately, probably be a bit destabilizing for the market, but it's a vehicle now in a really thin physical market that I think could really push things much higher, much faster than people think. And over the long term, what's going to undo this bull market? It's eventually going to be supply. We know where there's uranium deposits, they need higher prices to move forward. We're kind of getting into the money on some of them now. They take several years to bring online. So I don't think that there's a near-term risk to supply demand outside of some really, big exogenous shock. But eventually it's going to be new supply that comes on that will spell the end of this bull market, probably at the end of the decade.
Okay, I think that gives us kind of a good where we are now, where we're going. So I want to get into supply and demand a little bit deeper, and I'll start with demand because you were mentioning a bunch of the things that are going on with demand right now. So we have this changing sentiment around nuclear energy, which is really helping to, it seems like almost every day we hear new announcements about different countries that are moving toward nuclear power. So there's that really solid aspect. There's SPUT, as you mentioned. I wanted to ask you about other physical uranium investment vehicles that seem to be popping up. And then the other wildcard demand factor that I've been hearing a little bit more about is the SMRs, where they're out there, but people maybe don't want to factor in how much demand it will be. So anything else we can say about some of those aspects of the demand side?
Yeah, what's so interesting about the uranium market and about the nuclear power market as we think forward over the next several years is that this whole nuclear renaissance in the West and this whole SMRs, small modular reactors that people are now very, very excited about, they mean absolutely nothing to this uranium investment thesis. These are not things that are coming online before the end of the decade. And I think that's really important because I think they're actually really important elements of demand in the 2030s. And I actually have spent a lot of time on site at several of the small modular reactor companies, and we're trying to get more under our belt, but I've been to most of the big ones at this point. And I think some of what these companies are doing is really revolutionary and will be critically important going forward. But none of them make the slightest bit of difference to supply and demand dynamics between now and 2030. What you have now is you have a China reactor build-out story, you have an India reactor hopeful plan, and you have Saudi Arabia looking to build reactors as well. And that's all you need. That's what keeps this market really tight till the end of the decade. Now, maybe I'll temper that by saying one thing. It's nice that we don't have more shutdowns, certainly premature shutdowns of Western reactors. That could have really spelt further bearishness. And we are seeing some life extension and permit extensions on existing nuclear reactors in the West. So those things, I suppose, help to tighten the market because you don't get the same attrition, you don't get the same shutdowns of these legacy projects that you might have been concerned about only a few years ago. But the West has nothing to do with this from a demand story. This is an emerging market, mostly a China story over the next several years. Where the West does play a very important role in this bull market is an investor sentiment. And so if investors get super bulled up here, they're going to put money into Cameco and they're going to put money into probably NextGen and Denison and whatever other ones. And we own all of those, again, for full disclosure. We think they're the best projects out there. But they're very quickly going to realize there's not a lot of ways to play uranium. There's not a lot of ways to get investment. And so you're going to see a lot of money pour into that spot. And it's going to be a self-fulfilling prophecy. So that's, I think, the role the West has to play. It's to kind of screw everything up with speculative excesses like we always do. But the fundamentals are going to be driven mostly by China.
Okay, I think that gives us a good picture of what's going on with demand. So moving over to supply, I often hear that supply is the much more complicated side there. So I'm going to start with some recent events. So we had Kazatomprom say that they're going to stop restricting their output starting in 2025, if I'm getting that correctly. It sounds like they're saying, okay, we see the new contracting cycle beginning, so we think that we can do this. So I wanted to start there because that's kind of a recent development and see, what effect does that actually have on the market? What should investors know?
Yeah, it's very recent. It's just this morning.
Yes.
So it's a bit of an open question yet, and I think the market is still, digesting it. the uranium stocks are down today on the news of that. They've been up very strong in the past. So I think that's just some normal consolidation. On the surface, I'm a little bit skeptical because they've never produced. They're talking about getting ultimately, what is it, to 30,000 tons. They've never produced 30,000 to 31,500 tons of uranium, not U3O8. And, they've never produced at those levels before. So there's kind of this talk. Yes, they did decrease production a couple of years ago around the time that Cameco did, and they have brought that back online. But there's sort of like a talk like, well, we're just going to, turn the spigot back on and bring production back up from all this stuff we've been restricting. But they've never produced anywhere near 30,000 tons per year of uranium. So I think that there's going to have to be some increased investment there. Now, in situ leach production in Kazakhstan does tend to be shorter cycle, but that seems like a very ambitious target. And Kazatomprom, which we do own also, has had a pretty repetitive history of missing their production targets. So I don't know that this is kind of written in stone just yet. Obviously, bringing on they're the largest uranium producer in the world. And so bringing on an additional 10,000 tons per year of uranium impacts the supply and demand balance. But actually, the deficits are so severe going forward over the next 7 or 8 years that it definitely does not swing this market into surplus. It keeps things very, very tight. We do have this primary deficit in the market today, and which has been met by the stockpiles that are now going away to zero. So the market can definitely absorb it, and I wouldn't be so sure that it's coming online quite the way that they claim.
Okay, yeah, that's definitely an interesting analysis there and something for us to watch. So when I saw that news, I thought, okay, so here's a producer saying, all right, the market circumstances right now are good enough for me to bring more supply online, although, as you mentioned, they could face setbacks perhaps. What about the greenfield projects? So we've talked, I think, in the past about incentive prices for uranium. So if you're a company who has a greenfield project, not in production, maybe you're in exploration kind of stage, what price do you want to see at this point?
Arrow claims to be, NextGen claims to be the lowest cost. I think they have like $55 in their pre-feasibility study. I think realistically that number is probably closer to $70 a pound, just given the fact that the banks are still skeptical on uranium. Yes, it's in a bull market, but it wasn't too long ago. It was only 19. And in our estimation, Arrow is probably the best undeveloped uranium deposit in the world. So I think it will be the first to go, and it's going. They're starting down that path right now. What's the price that's needed? I don't know, somewhere between probably 50 and 70. And that's the best. Denison looks really good too in the Wheeler project. So that probably comes on, slots in next. There's some more technical challenges there, but they seem to be doing really well in addressing those. And they have, water incursion that they're going to have to freeze their aquifer and stuff like that, which originally when we had sort of heard of those plans, we said, oh my goodness, that sounds awfully complicated. But it seems like they're doing a really good job on their feasibility pilots and stuff like that. So I think that'll probably be the next. Those are the highest grade, best quality projects. After that, you need higher prices. You need higher prices. And I think that, again, ultimately, when I think forward as to where the long-term sustainable uranium price is, it's probably around 120. I would suspect that if you had that nice and stable for a period of time, you could probably incentivize and bring online enough production to meet demand. Open question, but I think it's somewhere around that line. It's not going to be demand destruction that ends this bull market. It will be new supply, but it's going to take time. And Arrow is talking about coming online in 2027. I think that'll depend on whether they have to build out all of their, upgrading facilities themselves, which is what is in their plan now. That seems ambitious if that's what's going to happen. If ultimately something happens and they combine with somebody else that has excess capacity around there, that might be a way to bring that on faster. But I think 27, 28 for the newest production is probably the best that you're going to hope for. Kazatoprom's announcement today, we'll have to wait and see whether there's anything to that. And then there's a little bit of in situ production in the United States, which used to be the world's largest uranium producer and now produces nothing. Not the most economic production in the world, but from a security of supply basis, I think that's really driving people, policymakers in the U.S. to push for more domestic uranium production. So those will probably go. What order is that? Give or take. But I think it's probably, you're looking like from now to 2027, I think it's pretty tight.
Yeah, okay, that's really helpful because I think, in the past people would talk about, that one incentive price that we will see and then supply will start to come online. But as usual, it's more complicated than that. There's different incentive prices depending on the economics of each project. So continuing on about supply, there's a lot that we could go into about supply, but I'm gonna put it back to you and just ask, what key supply factors would you pick out for investors right now?
So I think the thing that really is most important on any commodity market on the supply side is to watch how much money gets actually invested in the ground. Because there's a bunch of different things. There's the price of the commodity, there's the price of the stock, and then there's how much money gets raised and actually invested. And one follows the other, but that doesn't always have to. And we've seen cases in the past where, prices of the stocks get nice and high. However, they don't necessarily have time to raise money and bring on new projects and stuff like that. And, copper back a couple years ago was a good example. Copper bottomed in 2015, and by 2018, 19, the stocks had run pretty well and what have you. Now, if they were able to raise all kinds of secondaries and IPOs and debt offerings and sanction all these new projects, you might have a problem. But copper prices fell back down and the stocks collapsed sooner than that could happen. And so you didn't get anything really invested. Uranium, I think, is the same. The stocks are moving now, but there's no new projects that are really moving forward. So Cameco's announcement today, I suppose, is the first. Watch Arrow and watch what Cameco does. But until you start to see money get deployed, I don't think you have to get too worried. Once that starts to happen, and once that really gets going, that tends to be kind of the kiss of death in any commodity market. And that's when you should start to get a little bit skeptical. But it's a while yet. It's a while. And quite frankly, you did talk about the SMRs and you did talk about, the nuclear renaissance in the West. If we end up in a deficit that takes us through the end of this decade, then there becomes a very real question of whether we can bring these SMRs on faster than we can ramp up uranium demand. And that's a much longer term issue because now you would be in a major new build out phase. So that's something to watch as we sort of progress down this decade. But for right now, I think we're in a pretty good sweet spot here where there's nothing that can come online really quick. There's nothing that's just waiting, in the wings. All this uranium enrichment underfeeding, that's all gone. You've had swoosh shortages and that whole stockpile is kind of swung the other way. Your commercial stockpile seemed to be largely depleted. At some point, I would suspect, and this is pure speculation, but at some point in the future, as the utilities begin to really get nervous about where they're going to source supply, maybe they go and clean up some of the stockpiles that are now accumulating in the Sprott Physical Uranium Trust. I mean, it seems like a natural source of physical material. They might have to pay a premium. That's complete speculation. I have absolutely no idea. But at some point, we're going to have a physical shortage. And remember, just for your listeners, uranium is also a really weird market because it goes in these 3-year fuel cycles, right? And so like somebody said to me, well, how do we keep the reactors open? What's coming out of Russia after Russia, Ukraine? Are they exporting uranium to the United States? Are we getting, all that enriched uranium and the fuel rods? And how do we keep these reactors going? Well, it's because you have a 3-year fuel cycle in every reactor. And so the day you have a market disruption, it doesn't necessarily cause a cascade, but that does catch up with you eventually. And so here we are, a year into this, and these are all very, very open questions. And, we are going to have a very tight physical market in a hurry.
Okay. And I think the next step then is to put this together, the supply and demand, into what it means for prices. So I'm seeing kind of right now a couple of key questions that people seem to be asking. And one of them is how high the price could go, which you kind of addressed at the beginning. So we don't necessarily have to go into that. But then the other thing that people seem to wonder is, okay, not only how high can it go, but do we get that price spike scenario, or does the increase look a little bit different? So I'm curious to know your thoughts on that.
Always tricky to predict that, but I'll give you my best guess. I think over the long term, on a sustainable basis, I think the market, both supply and demand, can probably sustain $120 a pound. And that would be enough to bring on supply over time. I don't think, though, we've spent enough time in the last 10 years investing in the pipeline, investing in the supply chain to work ourselves through. So I think as of today, I think that a price spike is very likely, well in excess of that. And I think that it's entirely plausible to see uranium at $300 a pound in a spike. Now that won't be sustainable, but it almost seems likely. You never want to say certain that you're going to overshoot that 120 for sure, because I don't know, if you took uranium to 120 tomorrow, that's not going to change anything. That's not going to make more materials suddenly appear overnight. So I think that a price spike scenario, given the peculiarities of the uranium market and given how sticky demand is, I think that a price spike is very likely. And I think a long-term sustainable price is probably, I think 120 brings on enough supply over time. Could you get 300 before then? I think absolutely.
Okay, so thank you for going through that. I think that helps us understand what's going on there. So the other thing I wanted to do is make sure that we relate all of this back to investors. So investors, I think, are in kind of an interesting scenario here when it comes to uranium. So you've mentioned a whole bunch of names that you like, but we're in an interesting time right now where, okay, so we might have a price spike scenario. There aren't a whole lot of names out there to choose from. I don't think we've started seeing companies get excited and pivot to uranium because the price is going higher, although I imagine that's to come. But, how can investors strategize right now in this kind of time of uncertainty, but high optimism?
Well, I do think that there are really two primary producing uranium companies in the world. One of them is in Canada, that's Cameco, and one of them's in Kazakhstan, and that's Kazatomprom. So people have to get comfortable with Kazakhstan risk. Some will, some won't. It's not listed in Kazakhstan. It's listed in London. It's an ADR, depository receipt in London, traded in US dollars. But the assets in Kazakhstan, there's no two ways about that. So there has to be some comfort there. That stock is awfully cheap. It's probably trading at half the valuation off the back of an envelope that Cameco is. But of course, it's in Kazakhstan. After that, you're either forced to look at a tracker vehicle like the Sprott Physical or like Yellowcake in London, or you go into the development stories. And then from there, it's just how much risk you want to take and how speculative you want to get. And you can, there's companies that are kind of further along. And again, I mentioned the two that we think are the furthest, which would be NextGen and Denison. And from there, it just really fans out into whatever, there's something for everybody after that, but they're all quite speculative. They're all very early stage. And yeah.
Yeah, I think that's a good way to describe it. Something for everyone, depending on what your goals are there. So I want to also, when it comes to the companies, bring up another piece of current events. So this past week, we had the merger announcement with ISO Energy and Consolidated Uranium. And I'm curious to know if you think we're going to see more M&A activity in this sector, in this environment that we're in currently.
It's a really good question, and please don't ask me any details on that particular one because it's not a transaction that I followed too closely. But there could be a few natural consolidators. There could be a few natural deals that kind of make sense. And look, typically when you get animal spirits going through some of these markets, you do get to see things like that. There's a few that jump out immediately, and there's a few that, who knows? I'm not going to speculate on what may happen, but, like I said, there are certain projects being advanced where, some need additional infrastructure and other companies nearby have excess infrastructure. That would strike me like an easy fit to put together, but who knows? I mean, I've never done very well playing the M&A game. I prefer to look for really high quality assets, and more often than not, they end up getting taken over, but it's never by who I expect and when I expect it.
Okay, I think that's really fair. So I've gone through kind of everything that I was hoping to cover with you, but I am going to throw it back to you just here at the end and ask if there's anything else you think investors should be aware of in the uranium market at the moment, things that you're watching.
Well, I do think from a kind of really big picture perspective, there's all this talk going on about the future of energy, and for a long time, obviously, renewables were the darling technology, and we always were extremely skeptical because they're very, very inefficient forms of energy transformation. Basically, they require so much material to make these things, and that material requires a huge amount of energy. And so now all of a sudden, you're in a bit of a downward spiral where you're making energy using a lot of energy, and that's never a good idea. But it addresses this question of, well, then what do you do if you're worried about carbon and climate? And of course, to us, the answer has always been nuclear. Nuclear is the most efficient form of energy transformation ever invented, 3 times better than the best oil and gas, 10 to 20 times better than the worst wind and solar, particularly if you have to back them up with batteries. So to us, this was always the answer. And, while everyone seems very pessimistic about everything, I think that perhaps we could be on the verge of a huge major transformation where finally we do appreciate nuclear for the unbelievable technology that it is. We could be at a moment in time that's just as important as, England around 1650 when they went from chopping down trees to burning coal. And that ushered in the biggest period of prosperity and economic growth that humanity's ever known. So I'm actually very, very optimistic. And, you're starting to hear and see things like, steel companies beginning to look at technologies away from coal. And the question there is, well, how do you power the thing? How do you get the electricity? Because they're all very electricity intensive. And you're starting to hear rumors and even some announcements of nuclear power being used to, be married to one of these energy intensive materials processing facilities and generate, carbon-free steel, let's say. That would be, unbelievable advancement. Just to put that in perspective, steel generates as much carbon dioxide as the total global passenger car fleet. So if you can crack steel and you can do it using the most efficient form of energy known to man, you could not only reduce 9% of CO2, but you could do it in a way that's much more energy efficient than we do today. So I think the possibilities are almost endless. Nuclear's had a few false starts in the past, 50, 60 years. One of the main reasons is because we've had so much cheap, abundant hydrocarbon energy. The biggest advocates against nuclear for years was the coal lobby. Those people, I promise you now, don't have the same budget that they used to, at the very least. And I don't think they have the same friends in Washington and Ottawa that they did before. And so, perhaps we're really going to see an energy transition that makes sense here. And maybe that could be just one of the biggest bullish tailwinds that nobody has in their models for the whole planet for the next 50 years. So that's my bullish, very optimistic end that I'll leave you on.
Yeah, I think that's a great note to finish up on. Thank you so much for joining me today to go over what's going on in the uranium market. This is really informative.
Thank you so much.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is Adam Rozencwajg with Goehring and Rozencwajg. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.